Hello, everyone, and welcome into crushthestreet.com. I got an excellent, passionate guest on the line who is all over the crypto space. His name is Coney of Cryptoverse podcast, Cryptoversity.com, the one-stop shop in learning cryptocurrencies. And it's an exciting time to be talking cryptocurrencies. I mean, we're seeing, a move off of that most recent low here. And I think the space is getting a little more confident about maybe a bullish trajectory. But, we've seen that before. We saw the $6,000 to $7,000 range, from August to November of 2018 for us to watch Bitcoin go cut in half from that spot. So I think all scenarios are on the table. But to discuss this with us today, Coney, thanks for coming on the show with me.
Oh, thank you very much for having me. I really appreciate it.
Well, interesting story that we were talking about before this interview here. A lady concerned about people retiring and turning to cryptocurrency, turning to Bitcoin specifically. So maybe we could start off the conversation here. What was the story about? And, what's the underlying problem that, cryptocurrencies are solving?
The thing is, they solve so many different problems. They're this funny hologram, and lots of different people come to it, and they see it as something different to someone else based on whatever you think the biggest problem in the financial system is. Like, you can come at it from 6 different angles and go, oh my God, Bitcoin solves this problem. And then someone else comes at it and goes, no, Bitcoin solves this problem. So I guess we don't even have consensus over what problem it solves because we're each calibrated to respond to it in different ways. And that's the elusive nature of Bitcoin and why they have difficulty regulating it, because sometimes it acts like a commodity, sometimes it acts like a precious metal, sometimes it acts like a currency. So it's hard to put a regulatory framework around it. In fact, when the British government came out recently with the tax advice, they spotted this kind of chameleon-like nature of Bitcoin. And they say, well, these are the guidelines, but really the type of tax you pay and how much very much depends on each individual trade, each individual time you spend it. And based on how you use it in each specific case, depends on how you're going to get taxed on it, which is like, wow. I'm glad it's impressive they spotted this chameleon-like nature, but it's a nightmare for people to keep records of everything and then work out if you spent it for a greater value than you bought it. That's a capital gain. Even though you didn't sell it, you exchanged it for a computer game, all that kind of stuff. So that just opened up a little Pandora's box there when you said, what problem does it solve? But let's get back to the lady who's the options trader. So she was a guest on the Wealth Formula podcast with Buck Joffreys. And I was listening to it and I was like, wow, this is interesting. So this lady, she got into an options trading firm when she was in her 20s, worked her way up. The company went great guns. She retired with more money than she could ever imagine making in her life. However, she said what was interesting is, despite being in the financial services industry for so long and making ungodly amounts of money out of it, and she didn't really understand money, and no one taught her about personal finance or budgeting. So what does she do? She does what a lot of celebrities do. She went absolutely mental with that money. Took up polo, started buying polo horses, invested a lot of the money with, well, she didn't name the company, but I think she was talking about JP Morgan when she said, I invested it with a well-known Wall Street firm. And they basically lost it all, right? By propping up IPOs that they couldn't sell to other investors, basically. So if they couldn't make quota, they would just take some of her money and other clients' money and then, make the IPO quota with their clients' money. And if those IPOs went sour, well, that was on the clients. Anyway, she found herself back at square one, from rags to riches and then back to rags again. So she went and started working for another firm and so on, and she's made it all back again. And she came up with her own little investing formula and so on. But then she retired, right, for a second time, a lot wiser. And then she said the only reason she came out of retirement was because she discovered Bitcoin and cryptocurrencies. And she said, I'm not, the technology is great, blockchain and blah, blah, blah. But what really, really inspired her to come out of retirement was that she saw that Bitcoin in particular was the solution to, what did she say, 80 odd million baby boomers who think they've got these pensions and retirement plans in the stock market that aren't going to be there. And she was like, until I found Bitcoin, I didn't see a solution to this problem. And now she's on a mission to educate all this last hair market, the baby boomers who think they've got a retirement plan and they don't, to encourage them to start putting some of their portfolio into Bitcoin as a hedge that may very well bridge the income gap when they retire. So that inspired me, to be honest, when I heard that.
So Chris, interesting stuff here. This is probably the reason why we can expect to see something like Bitcoin largely spike in the new future here and go to much higher levels like that, another bull market. So what is your thoughts as we are here in the beginning of 2019 in the crypto space? Do you feel confident about a bottom setting in here in the near term, or are you worried there's some more downside ahead?
Good question. I don't necessarily use words like worry because I'm not an emotional trader or an investor. So I think that's important to keep the neutral eye. So what we know is that there was a critical turning point on the 14th of November when for the first time in 12 months, Bitcoin dropped below $6,000, a level that had been tested, I don't know, 5, 6, 7 times and held, but eventually, gave in. And then, like you said, kind of went halved in value down to almost 3,000. I was doing my chart analysis today, actually, and there are, as you know, in the last month, there are actually 4 chart patterns pointing us in a bullish direction. There's like a bull flag, there's an inverse head and shoulders, and then there's it's already broken out of a ascending wedge anyway. So and now we're holding over 4,000 Bitcoin, which is good. So they were 4 bullish signs in the short term. However, I'm just looking at the longer term here, and Bitcoin remains below its major downtrend line, and it's quite a way off that. We need to be breaking above sort of 4,500 for me to turn bullish on Bitcoin in particular. So I think that will happen in 2019. That's again just my own sort of speculation there. The question is, what's going to be the catalyst? Well, I think most of us are counting on this backed product being the major catalysts that it doesn't necessarily have to catapult the fundamentals. It just needs to give people confidence back in the market so that they go risk on again, right? So it's all about perception at the end of the day. And if backed comes to market and starts doing a lot of business, that will be enough to set the market off again, I believe. So that's what I'm watching really closely.
Chris, so let's talk about fundamentals and valuations when it comes to Bitcoin and maybe some other cryptos. I mean, what a brand new entire industry that the financial analysts are having to deal with. I mean, we've always had these sort of historical metrics to base a certain company and to value it by, but with Bitcoin, $100 billion, what does that even mean? Is it high? Is it low? And by what standard, by what metric? So, with that and, just kind of a blank slate for you to take it where you will, what are your thoughts on it?
Yeah, market cap in crypto is completely useless, quite frankly, because all market cap is a very simple mathematical formula, which is current circulating supply of assets multiplied by the last price, which is, the last trade that went through or aggregated across exchanges. Well, and then you multiply one by the other and you say Bitcoin's market cap is 71 million. Okay, fine. But even in traditional markets, you can't really do that because there aren't 17 million Bitcoins for sale at the current market price. It just doesn't work like that, right? The amount of liquidity at the market price is very, very thin. So you couldn't buy $71 billion worth of Bitcoin at the market price. So market cap doesn't really tell us much at all. What I look at is like buy support, like how many dollars are actually chasing these assets. Like right now, with a current market price of $4,086 a Bitcoin, there are total buy orders on the books across 26 exchanges, totaling $173 million. That's more meaningful to me. There is X number of people that have put up $173 million that they want to convert into Bitcoin at some point. So that's all on the books. So that's what I look at. Is buy support increasing or decreasing in relation to the price? if we're going to get another bull market, what we need to see is the market price rising and buy support rising. So the appetite, demand needs to be going along with the price. And what's been happening recently with the rallies is as Bitcoin has been moving up, it's been burning up a lot of that buy support. When we were down at $3,200 Bitcoin, the buy support was about $350 million of orders looking to buy Bitcoin. Half of that's been burnt up, getting us from 3,200 Bitcoin to $4,000 Bitcoin. So that I'm wary of that kind of thing. If it had stayed at 350 or gone higher, I'd be much more confident that the bull market was coming. So those are the numbers that I keep a close eye on.
So another thing that is kind of interesting, and we've seen it with gold and silver. Everyone looks at the gold to silver ratio.
Sure.
What about correlations between Bitcoin and Litecoin? One of the crypto guys we follow was talking about Litecoin being around 1% or Bitcoin Cash being around 10% of Bitcoin. Are these correlations that just get into people's heads or the community's space and solidify themselves and become self-fulfilling over time? Because right now it's arbitrary to say that there needs to be some sort of 1% correlation between Litecoin and Bitcoin, or what have you, right?
Mm-hmm. Sure. I found it. Here we go. I was just looking at my bookmarks there because I've got a cryptocurrency correlation matrix, which is actually a URL, which may or may not load right now. I haven't looked at it in a little while, but that actually has a grid where it has Bitcoin and all the cryptos along the top, and then Bitcoin and all the cryptos down the side. And of course, down the diagonal, it has 1-to-1 because Bitcoin is one decimal correlated to itself. And then it shows, whether Ethereum is correlated or uncorrelated and so on. That's within the crypto space. And actually, that site doesn't seem to exist anymore, which is a shame. But I thought I could pull those real numbers up. I like doing that, getting the real numbers in real time, but that doesn't seem to be working. The last time I looked at it, though, yeah, most of the assets were pretty much correlated, which is why Bitcoin is like the bellwether. It's like the index. It accounts for half the market by market cap, at least. So that's one point of view. And when we get into bear market territory, or if Bitcoin doesn't have a decisive direction, I don't really spend as much time analyzing altcoins, because if Bitcoin it's heavy enough to pull the market in either direction. It led the bull market and it led the bear market, and it just dragged everything else with it. More recently, Ethereum's done a little rally of its own, non-correlated to Bitcoin, but it's not really going to turn the market around. By the looks of things, it's stalled at $152 per Ethereum. So yeah, inside the crypto space, I would say that very, very, very correlated. In terms of traditional markets, is crypto correlated to traditional markets? We don't know, because Bitcoin has only ever existed in an equity bull market since 2009. Stock market's been on a massive 10-year bull run. So we haven't had a sustained bear market in equities to gather enough data to see whether it's positively or negatively correlated. I have noticed that gold's been going up recently, though. It's been stuck in sort of a 5-year sideways channel in a reasonably wide range, but it's been moving up quite a bit recently, which pleases me, because I've been buying quite a bit of gold over the last few months. Yeah, it's halfway up its consolidation range now. The top of it being 1,361. And sometimes I overlay gold and Bitcoin, and they are somewhat inversely correlated, but again, need more data really.
Yeah, it's interesting. I mean, gold has had 2,000 to 5,000 years, depending on how you look at it,
Sure.
to figure out its price, its global price.
Sure.
And to a certain degree, it's saturated, less any sort of black swan event or fear of government or stock market problem. But the crypto space is very early stage, where just a small move into it, in theory, should send it much higher.
Yes.
And we're far from some sort of saturated stage in the crypto space where it trades, and the extraneous factors are the other markets. When people sell the stocks, maybe they go into the cryptos, or
right, sure.
governments, people fearing currencies. So we're a little bit a ways from that. I would say. And to that degree, I almost would say that we're a ways from, fearing the paper markets of crypto manipulating the Bitcoin price.
Sure.
Only because, any sort of news is going to be probably positive news. Just get people into the space until we do reach some sort of, Tim Draper prediction of what, an $80 trillion market cap. And then we're trading at some saturated price, and, things can happen from that point on. But anyways, I said a lot of stuff right there. Any
Gotcha.
comments you would have?
Yeah, sure, absolutely. In addition to looking at like the buy support rather than market cap, the other key metric for me is the trading volume. So that's what you just alluded to there, which is just need more liquidity in the market. To be honest, that's key. That's key. Because at the moment, even with what we got the last 24 hours, $16 billion is in total crypto has been traded. It's just nothing, is it? You'd only need a fraction of the forex volume to just leak into crypto, and it'll go ballistic, absolutely ballistic. And what was the highest we ever get in the crypto space, even during the bull markets? It was still nothing compared to traditional markets. Unfortunately, while crypto, in my mind, exists as a separate financial system, it is connected, meaning the value in the old financial system can easily flow backwards and forwards, which means if Bitcoin is this little, or crypto is this little tiny circle here, and you've got this enormous financial system bumping up against it, and if they were both, I don't want to use balloons as an analogy, but as good as any, if they both got air in them, and you squeeze the big one a little bit, you don't need to squeeze much air out of the big balloon to inflate the small one and then back again, which is exactly what happened in 2017. We only squeezed the old financial system a tiny bit, right? And no one noticed, right? That money came from somewhere. It was value came out of the old financial system, but it was a blip on the radar, but it completely exploded the crypto space and then disappeared again, right? With no appreciable impact on this gorilla, which is the old financial system. So that's going to continue to happen until one of two things happens. People transfer value from the old financial system into crypto and stick around, which is the HODL mentality, or people move their economic activity into the crypto space, which means things like moving your physical energy there, meaning provide services and products, get paid in crypto, and then spend that crypto. That actually moves the economic activity, which is the fundamental to the whole economy, which is you and me, into crypto. And then if you stay there, earn the Bitcoin, spend the Bitcoin, and the Bitcoin, pay your hosting bill, buy your domain names, whatever, right? Then these two little circles will start equalizing to the point where maybe they'll equalize entirely into kind of a figure eight, where they're both, balanced, or maybe one of them will go away, maybe the other one will go away, maybe one will dominate, maybe the other one will dominate, don't know. But the most likely scenario is that they both coexist, is what I would say. Because then at least until the oldest generation dies out, and we're only left with people who can't remember a world without crypto, which, I don't know, suppose someone born today will not know the world without crypto. My little nephew, who's 5, will not know the world without the internet. So similarly, eventually, the kids who then join the workforce and become the leaders of the future won't know a world without crypto. And by default, they'll just see it as so superior. So.
Yeah. I have a cute video with my second born son talking about Bitcoin. He's just with his little pill, looking at the screen. Look, Daddy, Bitcoin, and he was little thing, little face. Yeah, he'll never know the world without crypto, which is really interesting, unless the Peter Schiffs of the world or what have you are right, and it just completely goes away. It's a total fad, which I don't agree is the case. But what a crazy dynamic that we've seen with crypto. We've gone, and you put it so beautifully with that small balloon, a small amount of air, drastically percentage-wise expanding the space to such a large degree going into crypto. But having said that, it would almost be impossible to think that we'd be in such a bad bear market where that money, which was by many metrics not that much yet, enters the space and then completely leaves the space. Like, this was been a pretty brutal bear market by many measures. Some crypto's down 90%. How could that happen when it's such a small sector of the market that needs just if anyone even has any interest in it, it's going to send these markets higher. So talk about the brutality of the bear market, and Any thoughts on this?
Sure. Because it remains unregulated, the market's largely full of, let's call them amateur investors who don't invest based on principles, are easily scared, easily prone to greed and fear. So it's a very pure market in that way. All the big money can't get into crypto. The financial advisors, the fiduciaries, the pension funds, the mutual funds, they actually cannot get in because they're not allowed legally, right? So what they're waiting for is a regulated financial product, especially in the US, like Backed, for example, or like the CBOE futures market or whatever. But the thing, what's interesting is the CBOE futures market launched, I think it was almost on the same day that Bitcoin hit its all-time high. It was the 17th of December, 2017. And what that was interesting about 2018, it was the first full year that Bitcoin had existed with a futures market, right? So that's kind of interesting. And again, that's the first year of data that we've got. So you could say, oh, yeah, it was the futures contracts from the CBOE that crashed the market. Well, maybe, but we just don't have enough data. We have 1 year's worth of data to go on. So in the next bull market, we'll see what happens to the futures. But going back to the regulated financial products like Backed and like the Bitcoin ETFs and so on, at that point, I think of it down to the individual level. The minute Backed or the SolidX VanEck Bitcoin ETF goes live, all those poor financial advisors and fiduciaries that have their clients calling them up and walking into their offices over the last several years going, can you get me into Bitcoin? And I'm going, I can't. I honestly can't. I can't set you up a Coinbase account, cannot get your money in there. I'm not allowed to take your portfolio and stick it into Bitcoin, right? However, as soon as those products come on, from ICE, for example, game's on, right? All those financial advisors go, hey, Mr. Client, do you still want some Bitcoin? And you go, yeah, of course. And then there we go. That's that liquidity rush that's going to come in. Happy times.
Chris Coney, everybody. Chris, if people want to learn about you, learn about what you're doing and all the things that you're doing with your website and your work, sure, where would they go and what can they expect to find?
Sure. So if you want to check me out on YouTube, it's the Cryptoverse. And what you'll get there is news and commentary on current events in Bitcoin, cryptocurrencies, and blockchains, but through my moral, ethical, and philosophical lens. So that's what you'll get from me, that particular view on it. So I tend to take this meta view through the lens of morality, philosophy, and ethics. So that's that side of things. That's news and commentary. It's kind of chaotic. And whatever's happening at the time, I will comment on and interpret. If you want more structured education, that's what the online school is for. So that's cryptoasset.school is the domain name. And it's Cryptoversities, like Cryptocurrency University. And that's where I've got now, I think, 7 online courses that each have their own name, where you'll start knowing nothing and end learning something. Whether it's, what's the one I'm making right now? It's called Crypto Exchange Mastery. So that's like, you look at an exchange trading screen, it's just a wall of numbers, right? If you want to start going, wow, that's a wall of numbers, and then going, oh, this is second nature. That's what that course is for. And I've got 6 others beside trading cryptos, how blockchain works, blockchain security essentials, all that kind of stuff. So it's kind of like the Netflix of cryptocurrency education, where you sign up for a monthly membership, cancel anytime, and you just get access to everything. Easy.
Such a powerfully educational sector that we're in. I mean, so much. I just love the psychology that we saw over the last 1.5, 2 years, even going back to 2016, when people really were, it was hard to convince people to be interested in crypto, at $800 Bitcoin, $700 Bitcoin. Of course, people were very interested in it at $15,000 Bitcoin.
Of course.
Arithmetically, it makes no sense, but the psychology of it, the endorsement of the price, does what it does, and markets will probably do this as long as we live. At $15,000 Bitcoin, we didn't know if it was going to $50,000 or $100,000 or turning around right at that moment. And I think we'll look at that, and use 2017, 2018 as a case study for the rest of our lives. I'll be talking about it forever. And another thing is, there are people being born today and have been born for the last few years that will not know a world without cryptocurrency. This is happening. So we're in very pivotal times here. The markets are, shifting. Gold is going up. 2019 is shaping up to be a very exciting year. So Chris, Coney, thanks for coming on Crush the Street with me today.
I very much enjoyed it, mate. Thank you very much.